Hey, welcome everybody to the 40 Finance channel in a dark week of the stock market, depending on how you want to look at things. Obviously, if you own positions heading into this week, most likely many of them are down. However, this could be the opportunity, right? And that's kind of what we're throwing out here when I decided to do this. Is this time to buy stocks, or should you be worried that the floor goes a lot lower than where we are now? So that's what we're going to talk about. And I'll share my thoughts and opinions on the matter. And of course, I want to hear yours as well. So, obviously things got kicked off yesterday. I sort of talked about this the week before, that I thought the Netflix earnings call was going to be the first big one, right? Because it's just really tied into United States consumer. It's tied into a theme of growth and streaming and the way things were, at least during COVID. And if I did not hear the noise around me, television, internet, etc., then I would say that Netflix had a pretty good quarter. I mean, all things considered. They hit on their revenue, they beat their EPS, and for the most part, projected in line with next year. The catch, of course, as you all have probably read by now, is that, subscriber growth, 2.5 million in Q1 versus the consensus estimate was in the fours, I believe, if not higher. That was enough to spook everybody. And now all of a sudden, Netflix is the worst company on the planet, and, so on and so forth. And it's dropped. It was in 380 land the last time I looked. So, if I'm looking at Netflix myself, personally, I would consider buying that company right here, solely because of the growth in revenue and the growth in earnings. It does look like the multiple, the PE multiple that maybe people have paid for Netflix in the past, which has been anywhere from the 50s to the hundreds, looks like that's going to shrink over the short term, because now you're getting that growth story is kind of being disrupted. But it's kind of funny when we talk about that growth story and subscribers and whatnot. When I think of growth, I think of top line revenue growth and bottom line revenue growth, and the fact that most successful companies are doing both. They are growing the top line and they're growing the bottom line. And if you really dig into Netflix and you drown out the noise, that's exactly what they're doing. The only difference now, at least for one quarter, is that the people signing up for the service are projected to slow. So where does that go in the future? It's really hard to say. And it's very, very easy with any stock on the planet, after they have good earnings, to just go bonkers and talk about, this company's unstoppable. And then as soon as something negative comes up, you'll hear the news shift, right? Like, oh, cow, what's going on over there? They're in big trouble, yada, yada, yada. And with the market these days, or at least here lately, man, does it respond quickly to these kinds of things. And really, with Netflix being the first notable earnings call, I mean, you had banks and whatever, but those relatively predictable. With them being the first big earnings call, it's very obvious that it shook up the market and made people start thinking twice about where things stand, and perhaps most importantly, thinking about the multiple that they're going to pay for certain stocks. And that's where things get tricky in regards to our first question, or the question on the title of this video: is it time to buy stocks? And I'll bring up a couple examples and show you what I think. But I think that where I want to go with it is looking at the ones you own and truly thinking about the multiple, the valuation multiple. Hopefully it's a PE ratio that you're able to look at because your companies are profitable. But a lot of things have been reclassified in growth times, and they get downgraded in bad times. So they go from being, call it a tech stock, in Netflix example, they were a tech stock, right? And now there's pressure on them in the market. If they go down much further in a PE multiple, you're going to start saying like, oh, well, they're just like Viacom, right? They're just like AMC or whatever. That it's just, a media business and nobody pays that much for it. And if your stock gets reclassified down into a different category, that can be disaster. Another notable one in that same frame that we're seeing right now is Amazon. Okay, so Amazon, it's not as notable of a change, but they're kind of seeing a reclassification from high growth tech stock. So now people are starting to question valuation wise, is this just another Target, right? Which is stupid that it would do that. But they got nailed the other day because they came out and talked about a physical store with robots or whatever the hell was going on. And people took that as that's where they're marching towards. I didn't read that at all, but that's where the market went. Don't forget with Amazon, you get the AWS, the advertising, obviously e-commerce, logistics, all the things you already know. But I feel like Amazon's getting lowered, classified down a notch from high growth technology into this other middle tier bucket. And that's going to affect, what people pay for it going forward. So what's up, Kevin Hawthorne? And what's going on, CK1? In regards to PayPal, I did buy a few shares today. It was at like 165. It looks like what it still is. I think I'm not going to call the floor at 165 at this point with the way the market's going. And I think PayPal is a really good example. In fact, let's start with it, of how hard it is. If you're destined to buy the floor on a stock, I don't think you're buying today. My way that I'm doing it, be it good or bad, is just coming in and just, sort of DCA, except just popping in on the heavy red days and buying a couple shares of things and being done. No $5,000 days, right, of all in. I'm just peppering it in, sticking with companies that have an EPS, so that we can project how bad the floor would be, and trying to pay attention to those that have a reasonable chance to either be fairly valued in the short term, and then obviously long term, you want somebody with a growth prospect behind it. So let's take a look at PayPal just to kind of kick things off. There on the screen I was going to use anyway, which is... this is the losers of the day. I've shown this before, sorted by market cap. It includes everyone who has a negative share price for the day, and it's just sorted by market cap. So pretty much everybody, right, today, almost everybody's negative. But I think PayPal was on here somewhere. Yep. All right. Now let me load this up. So PayPal year to date, start at 193, you're down 164. Morningstar gives it a fair value of 151, and most likely that is coming from a forward multiple in the 20s. So you're in the 30s. Is that right? Yeah. You're probably lower than that now after today. But Morningstar's given it payment stock type multiple, which is going to be in the high 20s. And then, of course, using projected EPS, which is 528. So the 151 that you saw on Morningstar basically equates to, a PE of about 30. Okay, a forward PE of about 30 at 528. I will say that, to be clear, I own a lot of PayPal. It's the biggest holding in my portfolio. So, whatever I say, take it with a grain of salt. I think PayPal outperforms, not only in the short term, but in the long term. And I don't mind picking off a couple shares here and there at 165. I never did really think we were going to see this day, but here we are in the 160s. If it does go closer to this, then I don't see how you don't buy, to be honest. But that's going to probably hold true for a lot of stocks. If PayPal gets to 151, there's going to be other ones behind it or around it that offer an opportunity as well. Now, I talked about, since I own Amazon as well, just a few shares, but it is one that I believe has a good earnings case, projected earnings case for $4,000 within the next 12 months or so. So to me, this is a buying opportunity for Amazon. We know that you can see last year they were $42, and this year they're going to come in less than that. And who knows what Q4 will supply us in terms of an earnings call. But we've got this, which is $51 projected for next year. And then you guys have probably heard me tell the tale of how Amazon is investing significantly in the business. That's taking away from earnings. I think Amazon long-term, eventually they're going to get back into the 70s realm of EPS. I don't think that is next year, but I think, right now, under 3,000, you got a forward PE of 60 today, and it won't take long before they're looking ahead to the next year when it's kind of projected more or less in the 60s and 70s. So is this the bottom of Amazon? I'll tell you that it's probably the cheapest price that you've seen in a long time if you want to use forward PE. So you have triple digits across the late teens. What else we got? Right before COVID, where were we? We were 58. So that, you're coming on a historic stretch where if you ever thought about getting Amazon, this could be a really good time to maybe average down. I don't want to say in this environment anybody's on the floor, but if you always dreamed of owning one, I think a share here, obviously it's expensive, a share here, a share there, at this time with a 5-year horizon, I mean, to me it sounds like pretty easy money as far as a long-term investment goes. All right, let's see who's here. Rohit, what about Enphase, Zoom, Nvidia? Let's talk Nvidia. I spent a lot of time on Nvidia today, and I'll do a video about them in the not so distant future. I'm starting to study up a little bit. This is a stock that so first of all, at 239, now you're really talking about getting this one at a pretty fair price, in my opinion. You have to go back to October-ish to really get into those low 200s, and we're coming off of a Q4 that I assume they will have sold a crap ton of GPU units for Christmas. We won't find out till late February. But here's how bad it could get in Nvidia. And this is the concern that I would have. This is why I wouldn't buy this one all in quite yet. Pre-2018 so the early teens, all the semiconductors traded in this, kind of 20-ish range, including high flyers like Nvidia. I mean, this is 2019, and you had a forward PE of 22, okay? So if the market's going to take them all the way down to that level, this could get ugly, okay? Uglier from here. I don't know if that will happen, but if you got a 521 for next year, and we're talking about a 20-ish PE, I mean, gosh golly, that's $140 off the top of my head. Am I saying that's going to happen? No. And I'm going to sneeze here in a second, so hold on I think I got it. But history-wise, that could happen, right? And somebody would have a case for it. I think semiconductors are way more important to the health and stability of the universe than they were way back when. But don't be surprised to see it. Even a 30, okay? Even a 30 or a 35 probably doesn't get you much past 200. So if I was going to go for a rock bottom floor in Nvidia, I would hold off till 200. If you've always dreamed of getting the stock, you obviously have a substantial discount today. And again, what's stopping you from buying one share today? Scratch the itch, but save enough money so you can follow it down if there's more to come. Another 10% from 240. 240 minus 24 is 206. So 206 is another 10%. Just save money. Do something to start your position, satisfy the urge, and then go from there. Honestly, that's what I'm doing with PayPal and QQQ. You guys know I'm on a hell of a QQQ stretch, and that continues today. I bought 2 shares of QQQ, and I think it's went down since then. 356. In my mind, I had approximately 350 as what I sort of thought was the farthest downside for the Qs. That takes you back to June 21. And I would say as of today, that 350 floor is probably in jeopardy, just to be 100% honest. And I'll gladly buy under there, because if you told any of us that, hey, would you like to take a time machine back to June 21 and buy QQQ for $349, I think most of us would take that trip, right? I think we would, or I certainly would. And here's the thing about QQQ, I'm not buying it to trade it. So if you think of 5-10 years from now, are we even going to sweat some of this stuff? I don't know. All right. Let's see who else is here. Will, hello, how are you feeling about Disney? Oh, let me hit Rohit. I did Nvidia. You talked about Zoom. I am not a super big on Zoom, but I think that it'll be a long-standing stock, and they are profitable. Just be greedy on the price. And then Enphase, we've covered solar here recently. I didn't look at Enphase. Solar's in a little bit of trouble because of some changing dynamics, both in Build Back Better plan being delayed and also in some regulatory things where I was talking about this the other day. Florida, for example, people, they're changing how much money solar owners get paid to sell back to the grid, and it's going down. Okay, so they're getting less money. I think solar's in a tough phase right now. It's obviously ridiculously cyclical, as we can see on this 5-year chart. So there'll be a time, maybe buy low here. I don't know. Enphase's forward earnings, which are falling, the estimates are falling, but it's about $3. I can't, it's hard to want it more than $99 is what I would say. That would be a 33 on the forward PE in times of uncertainty, and it would still be more expensive than Solar Edge. Not right there anyway. Let's do this a little differently. It would still be more expensive than Solar Edge was prior to the pandemic. Okay, so if we use this as a baseline and we say that Enphase has better technology than Solar Edge, which I would agree with, so we'll give them a bump up to 30 on the forward PE. You multiply that by the $3 expected EPS, and you got a $90 stock. And today you're at 128. So I wouldn't be in a big hurry on it. But, there's another one. Do you buy it? You buy a share because you're just so enthralled with it. Do you buy a share and just keep seeing what happens? I wouldn't argue with that. Okay, so next, Will, I started answering your question about Disney. And if you're doing Disney for 5 years, why not? These parks are going to come back at some point. I think the streaming dream is probably pedaling in place. I think no one's envious of Netflix. Oh, I do see Netflix is back over 400, which is strong for them after such a shit show in the 380s or whatever. So $5, this is nowhere near what they have done in the past, okay? I'm going to switch to SeekingAlpha because they do a little bit better job on this. All right. SeekingAlpha, I like. I'm not going to say I like this earnings history broken out by quarter. I wish they did the years, but it gives us a better look. So let's go back to 2017-ish, and you've got, let's hit all 4 quarters. $1.53, $4, call it $6.57 on quick math in my head. 184, 187, 148, 184. So let's just call that about the same, $7 some odd. And now your forward EPS estimate is $4. So it's it's on half. But you see where I'm going with it. It's down significantly, and mostly because of the parks. Because of those are 33 some odd percent. That's what they used to be anyway. 33 some odd percent of the revenue and EPS. So Disney today, and I see Lion on here, he was waiting for Disney, and I think he said not a week ago, I wish I would have bought Disney at 140, and here you go. But Disney today at 138 for another 5 years, why not? The parks are going to open eventually, and there's worse companies to invest in. I don't see bankruptcy anytime soon, but I also don't see a stock that goes to $200 by April 1st. If they really do get to this world, let me switch this out real quick. By the way, if you're interested in learning more about SeekingAlpha, one of the ways that I support this channel is just by sharing discount on SeekingAlpha, and my affiliate link's in the description. Check it out. It's a really good deal on a 1-year premium subscription, which I do have. All right, so 2023. Remember, Disney has a weird fiscal year. It actually ends after everyone else's Q3. So somewhere closer to Christmas, we'll be focused on 556. That's a forward PE of 26. That's not bad. Certainly not. It's a great starting point. So buy a share and, add down if you have to. In the perfect world, July, which is hot as hell in Florida. I don't know why people go to Disney in July, but the parks are full again, and they're raking in money. And I don't think that that's such a crazy concept. Unlike Netflix, Disney doesn't need streaming to solve all the problems. They have other things that have not worked out well, and arguably, they did a really good job of pivoting and putting a shiny object up there, which we all fell for, Disney Plus. And now I would say parks are closer to coming back. So we'll see what happens. All right, take a pause here. Lion is right in with me. I knew after seeing Netflix after hours there would be blood today. Honestly, it isn't as bad as I expected. And Lion's calling for more room to fall, which I don't disagree with. And I knew the same thing. I knew as soon as Netflix was after hours minus 20%, I mean, it seemed pretty obvious. It's funny. Let's see if I can bring this up. This coin, Bitcoin here for a second. This isn't really a Bitcoin channel, but as soon as Netflix started going down, that's when Bitcoin was falling. Now, it's all after hours. So my joke is, who would have thought that Bitcoin and Netflix are correlated? And actually this whole world is down. It could be some interesting things depending on your beliefs in crypto. I will say that generally speaking, I buy $100 worth of Bitcoin every week. I did pause that in the first of the year, and I'm going to go back to it now that we're in the 30s. I think $100 a week, frankly, a fellow like me could blow that at a restaurant in a heartbeat. So I'll throw $100 a week at it, and maybe more if it were to ever dip big. Okay. Mr. Mughals here bought both ITSY and QQS today. Went short on the Qs today, going opposite of me. And where did Etsy end up in all this fire sale? 152, so they're very close. I think 150 is a great price for Etsy. It'll be a bumpy road, absolutely for sure, because of the fact that they'll be coming off Q4, and so generally speaking, the first few months of the year, the middle months of the year, summertime, Etsy struggles a little bit on sales volume just by the fact that people are out and about and whatever. But I love that company, and I think it's a great long-term investment and should really go up from here at some point. All right. Oops, I missed. CK1 has been buying Amazon, PayPal, Google, and VOOO. I think those are all good. I don't think you can go wrong in the long term with any of those. And Google, how is Google not the best deal perhaps of any stock on the planet right now? Certainly in the tech sector. I don't want to say I don't follow much in the way of steel mills and stuff like that. But if you're getting all the way back here, this is way pre-pandemic, you're in the 22 to 24 range in forward PE. Right now, it's 23, and this is not updated for today. This is where SeekingAlpha comes in handy. Cool thing about SeekingAlpha is estimates, best that I can tell. They update real time, are very, very close to real time. So when you're looking at some of the ratios and whatnot, they change, like as the stock price changes. Now they're saying forward PE for this year, 24.63. We're more concerned about next year. So right now, buying Google, the valuation for Google is approximately the same as it was pre-pandemic, okay? Meanwhile, they've done all the wonderful things that they've done. And this, I mean, $100+ a share. And you've got, looking ahead just to next year, another 17, 18%, getting very close to the $300 billion a year club. That's amazing. I mean, from a tech standpoint, I don't know who beats Google right now in terms of deals. Practical opinion, inflation and interest rate going to affect Amazon. I think it's a good question. There's this side of me for inflation in general, because I've sort of thought about it. And first of all, nobody's ever called me and asked me to speak on some sort of like fucking economic conference. So take it with a grain of salt. But, you know, I think what happens ultimately with inflation, if it really does get to a point that it makes people change their decisions, and I'm not sure that has happened yet. If it makes people change their spending decisions, then if you're anybody in retail, including Amazon, I think your revenues probably stay consistent, if not hitting the growth. But it's obviously the number of items sold would change, right? So if you normally buy, stupid example, if you normally buy a gallon of milk and a bag of potato chips, and then milk goes to $6 and you have to have that, you don't buy the chips, but at the register you still pay $6, right? So that's where things go. That's the simpleton view of it. And I think when you're on Amazon, what you would likely see, and this would go for your Targets and everybody else, is you're still buying the things you need, you're paying more. So all those little tricks in the cart on the way there, you know, buy this too, and customers also purchase this. I think that tends to go down. And frequency could go down too. But I'm not sure that inflation has changed any of my purchasing habits. I'm not in the market for Gucci purses and stuff like that. I would just say that generally speaking, when I want to go out to eat, I go out to eat, and when I want gas, I go buy gas. But, you know, those decisions get much harder further down the income profile, right? So if you only make $30,000 a year, probably do have to make some decisions. You know, automobiles would strike me as a place that they would suffer first because it's a big purchase. I think theoretically housing, except I'm anti-bearish on the USA housing market because I think the shortage of supply and the number of folks coming into the housing market who have money to buy a house, I think that takes care of problems there. And then you talked about interest rates. So specifically interest rates for Amazon and the stock market, to me, it's just all that valuation stuff that I've been preaching forever. You know, how is Nvidia 2 years ago, 1 year ago, trading at a 70 forward PE? But now with interest rates and potential alternatives, I think that just switches. Like, I don't think Nvidia sucks as a company. I think they keep going along and making good things and making sales, but the price that people will pay for it, because there's other things biting at their dollar, will go down. And that's 9 times out of 10 the kicker, right? And a lot of people miss that. When I'm on Twitter and stuff, man, do people miss the valuation multiple side of the argument. And I think that's too bad, right? Because go back to the Netflix conversation and you go stack up their earnings from, if you're running a lemonade stand and your lemonade stand is called Netflix, you had a hell of a quarter. You did what you were supposed to do. And as a matter of fact, your bottom line profits, earnings per share, exceeded expectations. But all anybody cared about was how many new people came to your lemonade stand, and so they dinged you. And they just said there wasn't enough people coming. We don't care that you made more money. To me, that shouldn't be that way, but the market votes. And they vote with their wallet, and here we are today. Sunshine NG, Nvidia could dive to 160, and I think that would be a surprise a ton of people, but everything I just said applies to Nvidia, right? About the valuation multiple. Nvidia will still make $5 and whatever that was, $5.20 non-GAAP, of course, EPS. And what people will pay for that piece of earnings is the only thing that'll change. I can't imagine that Nvidia doesn't hit their bottom line earnings. What will people pay for it? And we'll find out, right? I still don't think, correct me if anyone here is a computer person, I still don't think you can go out and buy an Nvidia GPU or an AMD one. I don't think like we can just walk into Best Buy and say, give me an Nvidia GPU and I'm going to go home and play some game with it. I don't think that world exists yet. So they're still having demand out the wazoo. Let's just do it for fun. Let's see. Nvidia GPU. I'll go to Google Shopping. And there's some. Now, I don't know the differences on all these. So right off the bat, if you see StockX, that is a reseller. That's a resale marketplace. Not much different than this one, eBay. Okay? I don't see Best Buy on here. Okay, I see a bunch. Oh, there's a Best Buy. I don't think this is like the best one though. So yeah, there's Micro Center. They've got an Nvidia, I think. That's not even, is that Nvidia? I don't even know what this is, so I shouldn't be talking. But long story short, there is a lot more demand than supply, and I forgot to switch over. Daggone it. Forgot to show you guys that because I didn't switch over. All right. Hey, a bonus. If you guys want bonus stock market news that I cannot tell you if this is for real or not, new study suggests oral CBD prevented COVID, and there's a whole thing about this. This is on Motherboard if you want to look at it yourself on Twitter. And I was thinking to myself, geez, if this were to hit, go get your CBD stocks, right? Now, I don't have any. But some of those cannabis stocks, if somehow this works out, that this is like oral CBD is a potent blocker of SARS-CoV-2 replication, then it might be worth a gander at a cannabis stock of your choice or some sort of, what was that? There's an ETF, I think, called Weed. How can you forget this name? Is this the ETF? Oh no, that's Pink Sheets. Anywho, it's out there. ETF Screener. I'm not going to be able to find it by here. Okay, just know that I showed this to you first, and if you make $1 bazillion, buy me a beer someday. This is on Vice. It's on Motherboard. Go read about it. Can you imagine the line at the CBD store tomorrow? If this holds up, it's going to be out the wazoo. And then you want to talk about inflation. Jeez, if I owned one of those stores, I'd be ramping it up. All right. Who else is out here? LD, good to see you. Overstock at 42. Interesting. Let's look at it. Oops, I'm pressing all the wrong buttons. So this is a company, obviously, if you know anything about e-commerce, you've seen Overstock. Start at 59 down to 42. Let's see what they're saying on growth. Revenue growth, looking forward. So this is another cool thing about Seeking Alpha, by the way. It's not always relevant, but they give you like the sector median and the percentage difference. This sector, I wonder if it's retail, so it's hard to say, but 28% growth next year. EBITDA growth, EPS diluted growth year over year was almost 90%. I don't have a forward one. Free cash flow went down. A lot of people are into that these days. Earnings diluted. 5-year projected growth rate of 40%, which is good. Yeah, there could be something here. Let's see, earnings estimates. I gotta switch to annual. I'm much bigger on annual because I don't trade on quarterly news updates. A little down next year, minus 7%, if that holds true. Revenue-wise, though, still growing. So not bad. I think the only thing that I would say to maybe pepper on the way down for this is if it gets lumped into, if somehow e-commerce falls into a world where people are going to say that it has a retail multiple, then that would be a little bit of a risk. Right now, man, it's already there though. 15.29, way under 20. So I think there's something here. I do. Now at this time of the market, it goes the same for everything else. I think that you are buying a couple shares to get it out of your system and then just prepare for the worst. And then let it ride from there. I'd be interested to read one of their earnings reports to see, like what's selling, what's sold well in the past and how is that projected for the future. Some of these folks, let's check profitability. Some of them really, these e-com plays really have to work hard to eke out a profit, although this one has gross profit margin of 22%, 13% on income. Tough to tell, but just watch the margins because those can turn into a problem on e-com because everybody can sort by price and everything. So it turns into like a race to the bottom, so to speak. Lions here, have you added more Palantir? Yes. DraftKings, no. Palantir, I buy literally 2 or 3 shares here and there. And I still feel good about it. Again, my projection on the last Palantir video I did, which was 3 some odd weeks ago, I was projecting a forward PE of 100 on an earnings of 20 cents. And so that got you to the $20. If we're going to be, that's going to come down though, if we keep going like this. And if you got to a forward PE where people are only going to pay 75, then you're right at $15 and it gets worse from there, right? So if it goes to a 50, if that's where the valuation multiple ends, then you're down to a $10 stock. So I'm not saying that Palantir is a no-brainer. I like what they're doing. I like the software effect. I like the way they're growing. But I also, if you're anything short of 5 years, I don't think that you can see it. Now, DraftKings, because I think the floor in DraftKings is so wide open, it can go down even more because of no earnings. I'm waiting there. I'm not selling DraftKings. I would not even think about it prior to what's going to end up being football season next year. But I'm not convinced that it's done at $20. And maybe it's not a high priority for me to buy when there's other more obvious bargains out there. Notably, some of the names, like I would buy Nvidia over DraftKings today from a sale perspective, because I think Nvidia probably has a better floor. But I think there's no way I buy it over Google, Amazon, probably not PayPal either, just to put it into perspective. And I would buy QQQ way over DraftKings for sure at this second. Sunshine, Netflix went from 700 down to 389, so could Nvidia. It wouldn't surprise me. Now, Netflix did bounce to the fours. How are we looking overall right now? Looks like, still down 1.61%. I look at the NASDAQ, by the way, in case you're not following that. Let's see. LD, also, Nvidia is still horrendously overvalued. $600 billion company. I think it will do exactly like Intel and grow into its valuation. Yeah, I mean, I don't think that there's anything in Nvidia's technology pipeline that says that company isn't going to do good things, at least as of right now. But when these bear cases in the market form, when you used to not hear anything bad about a company, now you start to hear the oh, but, right? Oh, but the automobile segment for Nvidia, they're facing a ton of competition. Maybe that's not what we thought it was going to be, right? And then somebody's going to come out and say video game sales are slowing and that'll destroy GPUs, and cryptocurrency mining is taking a different form, so that's going to kill GPU sales. Whatever it is, now those will be the headlines, right? Where it used to be they're releasing the NTX 5000 and you can only go up from here. So it'll be interesting. If you haven't been through a downside in the market, all the headlines will change and they're all going to be negative. And you just have to find companies that you like and believe in. And I don't think there's any single day where you blow your life savings to buy something on one day. I think you spread it out during this weakness, and then hopefully you have enough money saved over that you can eat dinner and do the things you want to do for 1, 2, 3 years, and you'll be fine. And that's the way I look at it. Eric Lee, market is crazy. Trade desk down heavy. ATY. I don't know ATY. Trade desk is one. I'm so curious about it, but I just don't see that it couldn't go down more, I guess is what I'm saying. Let's see what we can do here. Year to date. It's not even down that much year to date, 90 to 60. But if you did the forward P of 100, just for fun, call it a high flyer, that's $91. So a forward P of 50, which is probably more logical for a company that's been in business as long as they have. Now you're down to $45. This is what is attractive, though. 30% revenue growth. I wouldn't be afraid to buy this one, even at 60. And if it goes down, it goes down. Their earnings call will be interesting. Just hear where the advertising market is. We won't find out till Valentine's Day, though, it looks like. Jordan's, you still staying away from Square, Block? Yeah, I have mine. I'm down probably $80 a share. It is getting to the point that you would have to think about it if you ever wondered. If you ever wanted to buy one share or something of this, it's probably at its lowest valuation in a very, very long time. In fact, let's take a look. They had some, well, you had a similar in 19, but really you can see how these forward Ps showed up and then they never really hit their numbers to go profitable. And even this PEG ratio is the lowest it's ever been. Price to sales hasn't been this low since 2016. So there's something here at 120. I'm just not, and I'm still struggling to figure out which way they're going. They just announced that they're doing something with a Bitcoin network, Lightning Network, and it's over my pay scale there on what all that means. But basically, I think you could use Bitcoin to pay for things at a store. So that's great. If Bitcoin continues to be weak for several more months, then Square is going to be weak. And Square/Block is, it has all the makings of turning into a crypto company, crypto first company, right? So whatever people bought it for, say 3 years ago, maybe you were thinking Cash App. I think that's why I bought it, just in case Cash App does turn into the next big thing. But then you had this side parcel, which is what they started with, which is the small business merchant network, right? Where does that fall in cryptocurrency? I don't know. It feels like an identity crisis. It really does. And so maybe I would add to Square once I filled other positions I had to places I want. Basically, when I got bored, I would consider buying some more at this price. But for the immediate future, I'd like to know what the company thinks it's going to be in a year from now, because it really is sending some mixed messages, in my opinion. Who we got? Steve Speaks. What do you think about Etsy or Shopify? Both, I think, are good. Etsy is just a personal favorite of mine, but Shopify has just about reached it's there. I called this out, and let me put it on SeekingAlpha, because Shopify has just reached the buy point in my book. Whether or not I buy, I'm not sure. I'm just telling you guys. Let's make sure that this is going to hold true. God damn quarterly. I wanted annual. All right. So we're finishing up this year. Next year, 676. That's 151 on the PE. Honestly, I thought that theirs was supposed to be $9 next year. So I wonder if that's a typo. Off the top of my head, I thought that their forward EPS estimate was $9. It looks like that's actually 2023. So what I was going to say, and what I sort of hinted at, was this was going to be a PE under 100 for Shopify, which is still growing significantly, plus 30s for the foreseeable future. I don't think it's wrong to buy it at $8.93. It's just these numbers changed. The numbers in my head are different from what I see actually written down. But I still think you're getting much, much, much closer than we saw. Let's see, what was this? 1681, 1690. Okay. Yeah, that is stupid. But now we're almost half that. I don't know, you're down 13% today. Is there any reason to buy more than one share and buy the rest later? I don't think so. I think you dip in and buy one and dip out and just wait and see what happens. Eric T, the number one thing that I am buying right now is, it's mostly in 4 places, actually. I buy one or two Zillow shares on every red day, so it's like $100. Zillow's in the 50s. It might be in the 40s now. And I believe that Zillow will surprise in 2 years. That's just me. Then I'm also buying some PayPal. I've been doing that since the 180s. Now we're into the 160s, 50s. And then the rest is pouring into QQQ at a steady rate of one share here and there. Also bought a few TQQQ, which is the leveraged edition. And you might be thinking that that is counterintuitive to everything that's going on today. And it is. And that's exactly the point. I think that this Q1 pain eventually goes away. And I don't think that eventually is 2 weeks from now. I think that heading into the summer, May-ish, June-ish, that a lot of this goes away. And I am not done buying my position on the Qs and the leverage Qs. So in fact, I'm not even sure if I'm halfway done. So with that in mind, I'm taking advantage of these little pops here and there where things are going down. And that's, in my opinion, there is going to be a lot of things that look good. We've talked a lot about individual stocks right now. And almost all the ones that I care about enough to invest in are in the Qs. And instead of me trying to figure out if it's going to be Google, Netflix, Nvidia, etc., that's going to win, I'm strategically picking the Qs temporarily until I can have a better feel for where this thing's going to go. So that's my bit, just to answer that question. Oh man, Kai Lee, America is finished. China's economy will dominate the world. Holy mackerel. Larry Massa has got rockets going on. Igor, shop under 900. We just talked about that. Good to see you, Igor. Larry, how's the Q doing? Good question. Let me see what the price is. So it's at 354 today. I bought, I believe, 2 shares today. And this is totally off the top of my head, but I think I'm down into the 360s. Call it 366. So I'm $12-ish off of what we're seeing here this afternoon. But I'm not worried about it. That's the least of my concerns. And what I would encourage anyone who's thinking about the SPY or the Qs or the leverage versions of either is to go through a big old chart like this and break it out, man. Break it out to years and days and then candles and take a look at how far you think it could go down. So I'm not going to do it on, oh, here we go. Let's just get to more normal times. Let's go way back into 18. 18 had a big interest rate China fight. So peak to trough on just this one that I know nothing about. Approximately 173 down to 154. So that looks ugly, and that is, what did I say, 10%. This looks ugly. This is a 10% fall. It's a nothing in the scope of humanity. How about this one? 169, nope, 171 at the end of the day. And then there's something bad going on down here. I'm trying to hover over. 153, almost again, almost a 10% again. Okay, that was one stretch of time. Let's check out, this one looks ugly here. 113 to 96. That is a little bit more. That is maybe 12, 13%, peak to trough. Dude, it just doesn't fall that far. That's my point. $99.53 at close. Few weeks later, you got down to the 90s. So grab one of these charts for SPY, Qs, whatever the hell is your thing, and feel better looking at it. They don't fall far. They don't fall as far as you think. Now, I'm not saying it can't happen just because I scrolled on a random chart, but the fear index right now versus the reality of a SPY and Qs, two different things. So you turn on the radio right now or whatever you listen to, and you get the idea that the Qs are going to go from 350 to 250. That ain't happening. No way in hell that's happening. Just to tell you, there's no way that's happening. And if it does, the world is in much worse shape than we could have ever possibly have imagined in the economy. So, I thought the low for the Qs was 350, as I mentioned earlier. It looks like the way things are trending, it doesn't seem like 340 is as far away as I thought. So you'll have a recent high of $400, and let's just pretend it goes to 340. I wouldn't mind at all. Be honest with you, I'd keep buying more. That is what? 400 times 10% is 40. So it's like, oh no, it's not. That's like 15%. I was doing my math wrong. $400 down to 340 is like 15%. It's nothing in the grand scheme of things. It's nothing. So that's why I can buy the Qs with confidence. And the people that are shorting, they're going to make money if it goes to 340, and that's fine. But I'm not worried about cataclysmic failure at that. And I just realized I was looking at a chart and I forgot to put it up, so sorry guys. Derek Ridland's here. LD had a cannabis post. I was talking cannabis earlier. They're so cheap. Curaleaf. I don't know any of these. But the suggestion there is if you wanted to play on my tweet about CBD oil, it looks like there's potential there. Derek Ridland says dollar cost average all the way. Kai Lee, 30% growth, 20 to 30% growth will be eaten by interest rates. I might argue that, but I will say that the valuation for 20 to 30% growth could be eaten by interest rates. But listen, the money's the money in the sense that the interest rates going up could definitely hurt a company that has a high amount of long-term debt. But let's put it in the world of, say, I don't know, I did that AMD video yesterday, and if I remember correctly, they hardly have any debt. So whatever they're paying from an interest rate standpoint is very low to start with. They can use inflation rationale, not to mention demand, to raise prices slightly. And I think that their growth, if their net growth is 20% of sales, I don't think it gets disrupted by interest rates of 2%. I just don't. But to be fair, I'm not an economist. I'm just trying to think of it from real world situations. Let's see. GMA short squeeze in the next 2 weeks. I have no idea. Practical Opinion liked my milk and potato chips. That's funny. Annie KV, Shopify above 800. It's a dream to buy this company. If it's been your dream to buy it, then I would definitely buy it. I would buy one share today and get yourself started. And know that you may have to buy a few more if it keeps going down. Derek's all over Shopify. I think we all need, and also says we should be doing our homework. Stupid, cheap, catastrophic price. And that's a good call. I was thinking to myself the other day, and I'm going to maybe make this chart for you guys, not chart, but more like a spreadsheet. You know, pretty much if you watch the channel, you know I do my price projections. It's not a secret formula. I walk through it on every video. And I was thinking it'd probably be good to go through a ton of stocks, say 15 or 20 of them, and just really stack up, like trying to think about, you know, what is the best opportunity, right? So if Shopify, if we're calling it a buy at 800, right, that's worth something. You buy it at 800, you expect it to do X over the next year. Simultaneously, and I'm just doing this for example, Netflix just went down to a historically low valuation, and if you were bull in that, you might have a rationale that it goes to a different point. Which one of those two stocks offers the most upside? And that's probably in this era what you need to do, and that is precisely, guys, why I'm buying the QQQ right now. Because I think there's so much stuff out there, whether you're bullish on AMD, Google, Amazon, Nvidia, everything we talked about, Shopify, Melly, you name it, it's going to be really hard you're going to have to stack all those and make a price target for them through the end of 2022 and compare the numbers to bet on the right one, right? Because if you're going to buy them all, you might as well just buy the QQQ or something just like it, right? If you're going to buy one share of each, then what are you doing? If you're going to have conviction in a name, then you better make sure that you're not missing other opportunities from something else you like. And I think that's like pretty straightforward. So I might put that together. All right. Lion says, ARK stocks to the phantom zone. Everyone who laughed at Wuffy Buffy must be feeling stupid. Yeah, there were a lot of people who were anti-Buffett during the big run-up, and that's... I have a feeling that Warren's phone is ringing off the hook at this point. Kai Lee, is it possible Federal Reserve increases interest rates on Monday? I don't think on Monday, but I am speaking off the top of my head. So generally, from what I've seen, is the announcement comes and the move comes roughly a month later. So I think most of the projections right now are for March, because at this meeting it would be, is everybody on the same page to do it? But you know, I could be wrong, but I don't think it could possibly happen on Monday. And it won't happen, and actually, and I know this wasn't your point, but it definitely won't happen on Monday because they're not meeting until Tuesday, press release / news conference on Wednesday. Yeah, portfolios, my portfolio and yours down 20%. Yeah, I'm not even focusing on the red. I'm looking at the future, and I'm not selling anything in this crap, that's for sure. We already got rid of our tax loss stuff in December, sticking with what I got, and just adding. And then more than likely, there will be things by the end of the year that I dump off. But that opportunity to dump with any incentive, I think that was 2 or 3 months ago, before the end of last year. So for now, I'm just sticking. Stuff is so low right now. Small caps are just absolutely annihilated. So we'll just see if the stories play out or not. That's how I'm looking at it. Can't be impatient. Is it shocking that Coinbase has a PE of 18? Yes. It is, and the catch, Derek, if you haven't studied or read a lot about Coinbase, because it was intriguing to me as well, the only catch that I could find was that it's based on trading volume, They make money on trading volume. And so was the crypto boom in 2021 and 2020, does that get cut off or fall, let's just say falls in half in 2022, keeping in mind free money, stimulus, whatever, maybe a lower economic class will be cut out of trading because they won't have free money. I don't know, but the projection is that it does. Now, I would figure crypto volatility would make more trades. But, by the way, holy mackerel. We interrupt this news. 2.5% down on NASDAQ. Q's still above 350, just barely. 340 is looking pretty real. Amazon 2800. Visa getting close to the 200. That one just had bounced back. Let's check on our losers. Actually, I got to roll here in a minute, but let's check out our losers. Go by market cap, and we're trying to pick off percentages. So Amazon and Tesla. Tesla under 1,000. I think 900 is probably the real test for that one. 6.8%. That's some version of Alibaba. Walt Disney now down to 136, likely influenced by Netflix, which is down back to the 380s. Back to the 380s it goes. JD.com -5. Shopify probably ends at -15. Intuitive Surgical, so that could be interesting to look at. I don't know where they sit right now. Basically surgery robots, there's no going back from that world. That could be an interesting long-term play. I see a P ratio of 57, but that's trailing 12 months. That could be interesting to look at. C Limited, firmly entrenched in 52-week lows. I can't believe how many people talk about that company. It is intriguing, but I don't like the fortunes of my companies to be centered around a mobile game. And so I'll wait till it gets more attractive. Piedmont Lithium, who cares? NetEase, I believe that's a Chinese company. Moderna, what a rocket or weird, wild ride they've had. Freeport McMoran, that could be something. If you're looking for slow, steady dividends for somebody who does like earth material mining, they've been around forever. Ecolab, Block, there's Square. Snap, down to 32. I almost bought into the Snap story, and luckily I snapped back into it. Coinbase under 200, that's huge. So there's a lot going on. A lot going on, guys. And I'm going to scan through, but I am going to roll. Let it fall. I like what Derek Ridland says here. Just wait, let it fall. Let's get some Green Day stack cash until then. He's probably right. Yeah, great stock vortex. I can't believe the Amazon move under 3,000. But that's, it can't go on forever. PM watch party, then these little 30-minute shows. Okay. All right, guys. Hey, I'm going to go catch up on some of this action. I hope everybody's doing good. Derek's advice is good. Do whatever you can this weekend. Go shovel some snow, go mow some lawns, go make some money. So that's the only way we're all going to come out all right in this. Don't worry about selling. Well, I shouldn't say that, but how about this? I'm not worried about selling right now. I'm worried about buying and what the right move is. And I think that if you get excited about the opportunity and you find something you really believe in, then this really does seem like a good time for the right stock. So Just change the way you're thinking about stuff. Don't think about selling out of the whole market. This is the wrong time to do it. Think about where you're going to get in, and this stuff goes away eventually. So, all right, have a great day, everybody, and we'll see you next week.